Hundreds of millions evaporated from Apple's bank accounts in a single quarter, and the people responsible didn't just shrug, they doubled down. You're about to see why this wasn't a misstep. It was a systemic blind spot at the heart of a tech empire. Internal teams flagged the new Macintosh pricing as dangerously high, warning that customers would balk, sales would stall, and inventory would pile up. Scully ignored them. He framed the warnings as overly cautious, even timid, and pushed the launch full throttle. What happened next? Retailers struggled to move units. Wholesalers returned stock. Apple lost not just money, but the credibility of its sales force. You're about to witness how a single executive's ego and blind faith in premium pricing transformed millions in potential profit into a cautionary tale of corporate hubris. This is where it gets dangerous for you, because the same pattern repeats in every market, often invisible until it's too late, and your assumptions about pricing power might be exactly the same trap. The problem wasn't just numbers, it was psychology. Scully's team reported forecasts showing slow adoption at the $2,495 price point, but his response revealed a blind spot: belief in the Apple premium above market reality. Here's the danger you're ignoring. Executives don't just misread markets, they convince themselves they can rewrite them. Retailers felt pressure to carry stock that wouldn't move. Sales reps, fearing internal backlash, hesitated to advise discounts. Customers balked, wallets closed, yet Scully treated these signals as minor noise. This is where the human cost hits. Engineers worked overtime on a product flying off shelves only in their dreams, while real demand fizzled. Millions of dollars of potential revenue evaporated into the void. You're about to see how corporate ego can destroy money faster than competition ever could. Every warning ignored was a domino falling, each one pushing Apple closer to a financial collapse that would ripple across the tech industry. If you think price is just a number, you're missing the blind spot that cost Apple hundreds of millions. Here's the blind spot that no one in Apple's boardroom wanted to admit. The market wasn't abstract, it was human, and humans resist sticker shock. Scully's pricing assumed loyalty and aspiration would override hesitation. You're about to see why that gamble failed spectacularly. Retailers reported slow sell-through, but Scully interpreted it as temporary resistance, not a structural warning. Each unsold Macintosh wasn't just inventory, it was frozen capital, money that could have funded innovation, marketing, or strategic acquisitions. Meanwhile, competitors watched silently, identifying the opening Apple left wide open. This is where it gets dangerous. The cost wasn't just financial. Morale crumbled. Engineers and marketers began to question leadership. Confidence, once a hidden asset, turned into a liability. By the end of the quarter, Apple had misallocated hundreds of millions, not to rivals, but to its own hubris. If you think pricing is a simple formula, you're ignoring how human behavior amplifies mistakes. Every decision ignored the signals screaming that Apple had built a perfect product with a price no one could or would pay. By now, the collapse was no longer theoretical, it was happening in real time. Unsold Macintoshes stacked in warehouses like tombstones of lost opportunity. Here's the real signal you're ignoring. Internal pricing warnings were ignored because they challenged Scully's authority. Every discount suggestion or forecast adjustment became a political risk rather than a financial strategy. You're about to see why power struggles inside a company can cost far more than competition ever could. Cash flow projections bled red as inventory carrying costs ballooned. The human consequence? Sales teams demoralized, engineers frustrated, executives defensive. Apple was hemorrhaging not just money, but credibility and strategic agility. Competitors sensed the weakness, but the worst threat was internal, ego-driven leadership that refused to pivot. For you watching, this isn't just history, it's a template. Any organization ignoring warning signs in favor of belief over evidence risks the same domino effect. Hundreds of millions lost, careers shaken, and lessons hidden behind corporate pride. This is the financial collapse that could have been avoided if signals had been taken seriously. The crisis escalated when Apple's board began questioning Scully's judgment, but here's the blind spot. Internal politics delayed action while money vanished. You're about to see how hesitation becomes a multiplier of loss. Each day unsold Macs sat on shelves, Apple paid carrying costs, interest on borrowed capital, and shrinking morale compounded the damage. Retailers began pushing for markdowns, but Scully resisted, fearing brand dilution. Here's where it gets dangerous for you. Ego can masquerade as strategy, and companies bleed millions following authority rather than evidence. Cash that could have funded aggressive marketing, expanded production, or strategic partnerships was frozen in a product nobody could afford. Meanwhile, competitors quietly adjusted prices, captured market share, and watched Apple stumble. The human behavior here is universal. When leaders cling to prestige over pragmatism, they trigger a cascade of consequences employees can't fix. You're witnessing a textbook collapse of misaligned incentives, where the very systems designed to catch mistakes were neutralized by power dynamics, leaving hundreds of millions evaporating under the weight of arrogance. The crisis escalated when Apple's board began questioning Scully's judgment, but here's the blind spot. Internal politics delayed action while money vanished. You're about to see how hesitation becomes a multiplier of loss. Each day unsold Macs sat on shelves, Apple paid carrying costs, interest on borrowed capital, and shrinking morale compounded the damage. Retailers began pushing for markdowns, but Scully resisted, fearing brand dilution. Here's where it gets dangerous for you. Ego can masquerade as strategy, and companies bleed millions following authority rather than evidence. Cash that could have funded aggressive marketing, expanded production, or strategic partnerships was frozen in a product nobody could afford. Meanwhile, competitors quietly adjusted prices, captured market share, and watched Apple stumble. The human behavior here is universal. When leaders cling to prestige over pragmatism, they trigger a cascade of consequences employees can't fix. You're witnessing a textbook collapse of misaligned incentives, where the very systems designed to catch mistakes were neutralized by power dynamics, leaving hundreds of millions evaporating under the weight of arrogance. Apple's misstep wasn't just financial, it was structural. Here's the danger most overlook. When authority ignores warning signals, the ripple effect reaches every corner of a company. You're about to see why this is more than a pricing error. Retailers began refusing large orders. Distributors slowed shipments. Internal teams, once empowered to flag risks, stopped speaking up. Each missed signal compounded the collapse. Scully doubled down on premium messaging, framing resistance as temporary skepticism. Here's the blind spot you're ignoring. Human behavior amplifies missteps. Confidence turns fragile, teams become reactive, and opportunities vanish, while the company clings to ego-driven decisions. By quarter's end, Apple had lost hundreds of millions in potential revenue, morale was at a low, and strategic agility was paralyzed. Competitors adjusted silently, preparing to capture the market Apple was abandoning. For you watching, the lesson isn't just pricing matters, it's how organizational psychology and leadership hubris can turn even a groundbreaking product into a liability, draining money, trust, and power simultaneously. The fallout intensified as Apple scrambled to respond, but here's the blind spot. Reactive moves can cost more than inaction. You're about to see why every delayed decision amplified the hemorrhage. Scully authorized limited discounts, but by then, inventory had ballooned, retailers had lost faith, and cash that could have fueled marketing or R&D was locked in stagnant stock. The human behavior at play is relentless. Panic triggers overcorrection, teams chase short-term relief, and long-term strategy collapses. Competitors quietly gained, capitalizing on Apple's hesitation. Each returned unit, each lost sale, each frustrated employee created cascading consequences. Here's the danger you're ignoring. The very systems designed to protect the company, warnings, forecasts, internal checks, were neutralized by hubris and ego. For the viewer, this isn't just history, it's a blueprint of how leadership blind spots and human behavior can turn a successful launch into a multi-million-dollar failure. Apple's losses weren't mysterious. They were engineered by predictable reactions to ignored signals, misaligned incentives, and unchecked authority, leaving hundreds of millions of dollars and critical trust on the table. Apple's internal chaos created a hidden opportunity for competitors, but Scully couldn't see it. You're about to witness why a company can destroy itself while the world waits. While Apple's inventory swelled, rivals quietly adjusted prices, refined marketing, and captured frustrated potential customers. The blind spot? Leadership rarely measures the cost of inaction in real human terms. Every unsold Macintosh represented lost revenue, frozen capital, and a chance for competitors to embed themselves into the market Apple was abandoning. Human behavior magnifies these missteps. Employees hesitate, assuming leadership has a plan. Customers lose trust, assuming Apple misjudged value. By the time the company tried corrective action, the momentum had shifted. The real danger you're ignoring. Missed warnings compound, creating second-order effects that echo far beyond spreadsheets. Apple didn't just lose money, it lost credibility and leverage. For you watching, this is a warning. Ignoring signals, clinging to ego, and misreading human behavior doesn't just cost millions. It costs the very power to steer markets. The pressure inside Apple was now unbearable, but here's the blind spot most never see. Internal panic often accelerates loss faster than external competition. You're about to see why Scully's delayed reaction created a human feedback loop that amplified financial damage. Teams were paralyzed by fear of contradicting authority, yet each unsold unit reminded them of failure. Retailers pushed harder, threatening to cancel future orders. Marketing tried to salvage momentum but lacked budget and authority. Here's where it gets dangerous for you. When human behavior reacts to mismanagement, it compounds, creating second-order effects nobody can easily reverse. Cash frozen in unsold Macs meant delayed projects, paused hires, and a cautious corporate culture that would take years to undo. Competitors didn't just observe, they capitalized, silently eating market share Apple couldn't defend. The lesson is clear, though costly. Ignoring internal warnings and underestimating human psychology turns a single pricing miscalculation into hundreds of millions lost, fractured morale, and weakened strategic position. Apple's misstep wasn't a fluke. It was a predictable collapse driven by ego, delayed action, and human behavior. By now, Apple was trapped in a cascade of its own making, but here's the blind spot you must understand. Recovery isn't automatic once leadership realizes its mistake. You're about to see why late corrections often cost more than the original error. Scully finally authorized deeper discounts, but unsold inventory and fractured retailer trust meant revenue wouldn't rebound quickly. Human behavior had already shifted. Sales teams doubted forecasts, engineers feared future budget cuts, and consumers questioned value. Each action intended to fix the problem had unintended consequences, creating a second-order financial ripple. Competitors solidified their gains, learning from Apple's missteps. Here's the danger for you. Even a brilliant product can become a liability if human psychology, corporate ego, and misread signals collide. Hundreds of millions evaporated, not from market forces, but from predictable human reactions to authority and price. For anyone running a business, ignoring internal warnings while chasing prestige isn't just risky. It's a fast track to cascading losses, weakened power, and opportunities permanently lost. Apple's 1985 pricing collapse is a masterclass in this dangerous dynamic. The aftermath left Apple reeling, but here's the blind spot most miss. The real cost wasn't just the money, it was the erosion of authority, trust, and future leverage. You're about to see why hundreds of millions lost aren't just numbers, they're opportunities permanently surrendered. Internal warnings, once ignored, created a culture where risk signals were devalued. Human behavior ensured that fear, hesitation, and ego reinforced each other, slowing recovery. Competitors capitalized, markets shifted, and Apple's strategic agility suffered. For the viewer, this is the dangerous pattern repeating in countless businesses. A single leadership blind spot, amplified by human psychology, can snowball into a full-scale financial collapse. The $2,495 Macintosh wasn't just a pricing failure, it was a masterclass in how authority, misread signals, and human behavior combine to destroy value. You're watching hundreds of millions vanish, lessons hidden behind corporate pride, and the brutal reality that ignoring evidence in favor of ego doesn't just cost money, it costs power, credibility, and the ability to compete.